Happy holidays! I'm Kimberly and welcome to Auto Finance Sense, where I help you make sense of the dealership finance office the next time you buy a car. Let's get started. I hope everybody's doing well out there. I want to apologize ahead of time for the lighting in here today. Go figure, we're actually getting sunshine today, so it might be fading in and out a little bit, but I'll take the sunshine any day. Today we're going to talk a little bit about captive financing. What does it mean? What does it do? Who are they? What are your benefits? I'm also going to talk a little bit about pre-qualification as well as pre-approvals. So who and what is captive financing? Well, they're indirect lending subsidiaries, or ARMs, if you will, of auto manufacturers that make loans and leases for specific car brands. Captive finance companies provide store credit cards for retailers too. Maybe you have a credit card that you signed up with through a specific store, and it's through Synchrony or Comenity. There are a lot of tentacles whenever it comes to these companies and who their captive finance lenders are. JP Morgan Chase, for example, serves as the captive finance partner to domestic and global manufacturers such as these. The trade name Subaru Motors Finance, and even its logo, is owned by Subaru of America, but it is licensed to JP Morgan Chase. So you can see how far and wide this can go. So how can these captives benefit you, the buyer? Well, they can make offers with low APR incentives, also known as a subvented interest rate. This can be your 0%, 1.9, 2.9, and so on. They're always going to be for a specific term, like 48 months, 36, maybe they'll go 60 or 72, but generally it's going to be on a specific model from the manufacturer. Now, when it comes to incentives, make sure that you do your homework ahead of time on the vehicle that you're looking for. For example, they might be offering you a cash incentive where you get $1,500 off of the price of the vehicle, or special financing with a special interest rate. So what you want to do is go to an auto loan calculator online, plug in the figures, see how much money you would be saving in interest versus how much money you would be saving by taking that cash incentive off the price of the vehicle. Unfortunately, 0% are few and far between, but they are out there. One question that I hear is, well, can I get a lower interest rate than the one that the manufacturer is offering with their incentive APR? Yes, sometimes you can, especially if it's for a longer term and the special APR is higher. Like if it's 5.9 for 72 months, well, with excellent credit and a good amount of money down, you might be able to get a better interest rate through your credit union. However, always do your research first, because a cash incentive, for example, might require you to go through the captive lender to get that. The best incentive is a combined incentive, where you would get a special APR, let's say it's 4.9 for 72 months, as well as cash back, or that amount of money would be taken off the purchase of the car. So let's say you get a 4.9 for 72 months and $1,000 off of the car from the manufacturer. And even while you're at the dealership, always ask, am I missing any incentives? Are there any other incentives? Are you a college grad? Are you a military person? Always check for those incentives so that you don't leave any money on the table. Now, when it comes to getting these special APR incentives from the captive lenders, there's no certain credit score that is written in stone that makes it so that you get them immediately. But generally, they're looking for a 740 credit score, especially when it comes to getting that 0%. As I always say, it's not just about a credit score. It's an entire picture that needs to be put together and submitted to the lender. As a side note, a comment that I'll see often is, well, the dealership makes all this money off of the payments. They don't. Dealerships don't make money off of car payments. And when it comes to making money on an APR incentive, well, you've heard me talk about buy rate and sell rate. Manufacturer incentives such as a 1.9, 2.9, whatever it may be, is not marked up by the finance manager, and they make something called a flat. And that flat can be anywhere from $100 to $300. It's not that rate spread where they make a lot of money between buy rate and sell rate. So when it comes to these APR incentives, a finance manager is really going to push you on products because that's where they want to make their money. Something else that I've seen, especially recently, is that 0% is a scam. And I'm here to tell you that when it comes to your auto loan on your new car, if you get 0%, there's no scam to it. Your auto loan is a fixed simple interest loan, and if you get 0%, that means you don't pay interest on your loan. I think people might be getting 0% APR incentives from new car manufacturers on your loan confused with deferred interest programs that are offered on store credit cards, for example, where sometimes if you go beyond the allotted time on that 0% credit card, the interest accrues and the whole amount comes due. Sometimes a captive lender will offer 90 days to your first payment. You've probably seen this in commercials or online and you think, wow, I wouldn't have a car payment for 90 days. The truth is, a lot of people don't even think about whenever their first new car payment is going to be due. Generally, in the finance office at the dealership, on prime loans, your first payment date will default to 45 days out. But if that date doesn't work for you, then have the finance manager change it. You can go from 30 days to 45 days. On subprime loans, however, it typically defaults to 30 days until your first payment, and you generally do have a grace period beyond that. And when it comes to that 90-day to first payment offer, it's important to note that while you won't be making payments for the first 90 days, interest is still accruing during that time. And keep in mind that that means that your loan balance will actually be slightly higher when you make your first payment. So even though that 90-day to first payment may be offered to you, you don't have to take it. You have the option to set that date for something different, something that works better for you. Anything from 30 days to 90 days, if that's what's offered. And again, a little side note here, there are still some auto loans out there that give you the option of skip-a-pay. I don't know if you've heard of this or not. Skip-a-pay, or skip a payment in your auto loan, means that if you are in good standing, you can skip a payment. But be aware that if you have a 60-month loan, it then becomes a 61-month loan, as you will accrue interest during the month that you skipped. Now, captive lenders have really good relationships with their finance managers in the dealerships, and they can provide a flexibility on certain deals for the finance manager if it makes sense. For example, if I got a Tier 2 approval on a deal that I thought should be a Tier 1 approval for, say, a 1.9 or an APR incentive, then I would just pick up the phone and call my representative and go over the deal with them in hopes of getting what I call a tier bump. A tier bump is a term that I would want you to use with the finance manager if for some reason you didn't qualify for that special APR incentive. For example, if the finance manager came back and said, well, I'm sorry you didn't qualify, then ask them to please call their rep and get a tier bump. Now, the reason I tell you to do that is because no one else outside of the industry knows what that term tier bump is. And hopefully the finance manager will work a little harder for you to get you into that special APR. I recently did a video about how Ford Motor Credit lowered their guidelines in order to get more people into their captive lender for special APR incentives. So I'll leave that link for you in the description box below. Check it out. Captives can also provide special incentive APRs for CPOs, or certified pre-owned vehicles. So if you're currently in the market looking at new and certified pre-owned vehicles, CPOs, then weigh the differences between incentives. And when it comes to CPO captive lending incentives for APR, make sure you do your research first. For example, back in April of 2023, GM had some very nice incentives. Ford, Honda, Hyundai, and Toyota on their certified pre-owned vehicles. And another term that you can drop on the finance manager when it comes to CPOs is, could you please check your rate sheet for me and see if there are any special APR incentives on that certified pre-owned vehicle? I haven't decided if I'm going to go with that or new yet. Like most banks and lending institutions, I'm sure it comes as no surprise to know that captives have a dark side too. Like Hyundai's $19 million catastrophe, for example. Hyundai Capital America was penalized $19 million by the CFPB, or the Consumer Finance Protection Bureau, for repeatedly providing inaccurate information in nationwide credit reporting agencies. Or how about the $60 million that Toyota Motor Credit has to pay for tricking customers into unnecessary products that it then made unreasonably hard to cancel? That sounds like a ton of money to the rest of us, but to these financial institutions, it's just a drop in the bucket and a slap on the wrist. Let's talk for a moment about pre-qualifications and pre-approvals. I will often see people get very excited about the prospect of buying a new car, and they might get onto a manufacturer web page or even a dealership web page, and they see this shiny button that says click here to apply, apply now button. And then they go through the entire process and their credit gets hit, and they're nowhere near even knowing or test driving what vehicle they want. So personally, I would say wait until you have that. I would say wait until you have chosen your vehicle, gotten assigned out the door or OTD price on the vehicle. You know what you're going to be financing. You have an idea of how much money you're going to be putting down, and then apply. I get it. I know it's very tempting whenever you see the words. Go ahead. But there is a time limit, depending on the lending institution, for many of these approvals. And all the pieces of the puzzle aren't there yet. There's a deal structure that needs to be put together on the vehicle that you choose. The definition of a pre-qualification versus a pre-approval can often be fuzzy and confusing to consumers. Even experience says that a pre-qualification and a pre-approval do not guarantee approval. I think Ford is a very good example of a pre-qualification. If you go under their website, it clearly says, see if you qualify today, 0 credit impact, no obligation. This is something you want to look for, 0 credit impact. Whereas, if you go over to Volkswagen.com, they ask you to apply for financing. And when you click on Apply for Financing, in very tiny print that I'm not real happy with, it does say that the approval is based on applicant's credit score and other provided information, which tells me that, well, if I fill this out and go through this process, they're going to pull my credit. I think that they need to make this print much larger and make it much clearer to the consumer that, hey, this is going to be a hard inquiry on your credit if you go through with this application. Now, I wouldn't have known that had I not clicked on Apply for Financing and read that fine print. And try not to get too trigger happy. I would love to see you structure your own deal before you get into the finance office so that you have a much more level playing field. Well, what does that mean, structure my own deal? Well, it means that after you have negotiated an out-the-door price on a vehicle that you want, and you know what your credit looks like, then find a good auto loan calculator. Decide how much money you'll be putting down. You've done your internet sleuthing for the going interest rates, or if you think you'll qualify for an APR incentive from a captive lender, plug that in. Get an idea of what your trade is worth and how much you owe on it. Plug in the numbers. Find out where you're going to be at different terms. It doesn't have to be perfect, but at least it gives you an advantage before you get in there and they take advantage of you. Matter of fact, I think I'm going to do a video on that very thing. I'm going to show you how to structure a deal. Let me know in the comments below if that's something you'd like to see. How much is not knowing what you don't know costing you? So hopefully I'm able to help you through these deals, through the finance office, understand and throw some knowledge back at them. But most importantly, I want you to spend time with your friends and family over these holidays. That is what is most important, your friends and your family. Take care, everybody, and I will see you soon. Bye-bye.